With us, Devina Mehra is founder, chairperson, and managing director at First Global. Devina, good morning. Great to have you with us here on the program. Thanks very much for your time. Up and up, breathless, runaway rally. I mean, I think we can run out of adjectives, or maybe we won't, describing this the move that we've seen. And what has been remarkable, Devina, is over the years, these sharp pullbacks take lesser and lesser time to recover. You go back the last many years, and this one, the last week was, I think there was a headline I read, which is the second fastest pullback after a sharp fall. Buy the dips and how. Just your thoughts on the context we are in right now and the way forward.
Good morning to you and to the viewers as well. If you go back to my pre-election interviews, I had said precisely this, that we are spending too much time thinking about the election results. And the parallel I had given was 2004, where not just stocks, the whole market was circuit down and the trading had to be halted. And then you had the pullback. So I had said that, regardless of the election results, the markets and economy have a logic of their own, and that trajectory I do not see being changed on a 1-2 year basis. However, there might be interim volatility. So prior to the elections, in our PMS portfolios, we were fully hedged. We've cut about half the hedges, but we are still about half hedged, because in the short term, you might still see some volatility, but that was not my post-election analysis, that coalitions are not bad, etc. That was my pre-election analysis too, that regardless of the surprise or otherwise the election results, that doesn't change the trajectory of the market that much, and which is why we were always in cash. Even we had no cash. I mean, we never made a cash call. We were hedged.
Devina, hi, great to have you with us. And I want to start by complimenting you really on the debate that you raised on social media, because very few people in the market are able to do that. And I thought we really called a spade by saying, what is the definition of reform? Anything that benefits the market, anything that benefits industry is obviously reform. But if there is some populism, if there is some giveaway in terms of, any of the more rural-focused schemes, is that really such a bad thing? I thought that was a very, very, thought-provoking post. So let's actually get your deeper views over there. I mean, I think the market's now, settled with a very cozy expectation that nothing will change, policy continuity will go on. But is that such a simplistic view we should be taking as we get ready for the budget? And if there are some giveaways, would you see it as immediately negative for the market?
Surabhi, I mean, in your question itself, by using the word populism, you made it seem as if
this is a bias. Negative. Absolutely. So, it's a bias that we're all guilty of.
Yeah. Just as in company management, the way you manage a company, you have to balance the short term and the long term. So also it's exactly the same thing for a government, that you have to manage the short term, but you also have to look for the long term. And in the long term, you have to, two areas which you really have to focus on is health and education, which actually ties into employment, which ties into consumption, because private consumption growth has been very poor, and we really need to up that. And unless you have better employment, you will not see consumption going up. And to have even employable people, you need the health and education spending. So that's not, money down the drain. And one of the parallels I had given was the midday food scheme. And I still remember at the time, I think I must have been in school or something, but when MGR was pushing this midday scheme in schools, the general consensus was that we should not do this. This is a huge fiscal drain. But look at how it transformed Tamil Nadu. Tamil Nadu, which used to be among the poorest states a few decades ago, is now in terms of poverty, or rather absence of poverty, is the number one large state. Above it are only one or two very, very small states like Goa. So that is the transformational effect of interventions at that stage. Giving cycles to girls, again, looks like a giveaway, but that changes the mobility, that changes the number of girls who are able to study beyond a certain standard, because the high school or the college may be far away. So you have to balance that. And also, see, we are only looking at the spending side. Even on the spending side, for example, if you have to give even a giveaways, so to speak, to business, which is considered reform, is corporate tax cut the best way to do it? Because, if you look at the high tax paying companies, who are they? PSUs, banks and financials, and MNCs primarily in consumer goods. Now, giving them a tax break is not going to give a boost to any investment. So if you want, for example, investments by businesses, it has to come elsewhere. So that's one part. The other part is, how do you fund whichever segment you are trying to spend for, whether it's businesses, whether it is the poor. And
Sure.
that, if you look at, again, if you look at the fiscal way, I mean, if you want me to go into it, I can go into it, but because that's also very equally important, that how do you fund it? Because in the past, we have spent on social concerns without increasing taxes and having the debt go.
Okay, all right. Hi, Devina. Good morning and good to see you. Let's talk about markets then, how you approach it from here on. You had added, I think, some cement, some metal-related stocks as well. And you'd also mentioned, I think, that tech at some point of time will bottom out during this year and could give an entry opportunity. How are you positioned right now? The top theme that you like and something that you think has already played out. I think industrials was something that you believe most of it had played out.
Yeah, industrials, but we still remain overweight. We are watching to see whether it will top out sometime. But for now, we are still overweight. We are overweight auto components, pharma for the last year and a half. Yes, we had added in metals, but that's, even last time I had said that in metals, or for that matter, any commodity, you don't know how long the rally will last, because there are many more users of commodities than producers of commodities. So a commodity bull run hurts a lot more people than it benefits. So we are just watching. Metals are kind of at a crucial point. We are watching which way the thing turns. In terms of IT, yes, we think sometime this year it will bottom out, but we are not yet overweight on IT. So, one of the sectors you asked, that would be the broad view.
We've, again, the other point, which we're not talking about that much now, but which sort of occupied a lot of mind space, was mid-caps versus large caps. How has your thinking evolved there, Devina?
So, if you go by SEBI definition for mutual funds of large cap, mid caps, now the way they define mid caps are also pretty large caps, because it is not in terms of market cap, it is top 100, then 250 and so on and so forth. Not so much the mid caps, which, as I said, are pretty large in themselves. The part where we are very, very careful is anything below a 5,000 crore market cap. We don't even look at micro caps below 1,000 crore market cap, but even 1 to 5,000, right now we would still be very underweight compared to where we normally are in that segment, because we think the risks are high and we always manage for risk first. So that's been our philosophy. And even without taking that exposure, the portfolios are doing pretty well with lower volatility. So I'm happy with that. I'm not trying to be this high risk taker, trying to get all the sixes.
Okay, Devina, asking you about one hot sector on which I think the market's also trying to make up its mind, and that is life insurance. The rate at which policy changes, whether it's tax policy or some other policy, can get really confounding. But I don't know if you managed to see this whole sort of situation around surrender value, because I think finally we have the regulations. They are not as easy as what one was hoping, I think, back in December. But in case you've seen the latest on this and if you'd like to share any thoughts.
No, I have not really gone into the details of it, simply because we currently don't hold any in our portfolios, but we are certainly looking at it. So only if I have a clear mind, I like to comment on it.
Financials, how else are you approaching it? What are you still liking in financials? Large banks has been a non-starter of a space for a long time now. What about NBFCs? What else do you like here?
So banks is not something that we particularly like. As I've said plenty of times, that's a sector I'm always wary of. And if you look at the macros in terms of household debt, not so much also the percentage of debt to GDP, but if you look at the servicing ratio for Indian households, the debts that basically your debt service as a percentage of income, that's very high. That's, in fact, I was looking at some number which showed that it is as high as what it was in the US just before the 2008 crisis. So that doesn't give a lot of comfort to the lenders. But basically, I mean, I always think that lenders growing faster than expected is not always a good thing, because how difficult is it to give away money? It is getting the money back that's a problem. Having said that, because banks went through a very long period of underperformance, I mean, they may not underperform so much anymore. We have added some banks in our last rebalance, but we are still significantly underweight, and we are still significantly skewed towards the PSU banks.
Okay. All right, Devina, we will leave it on that note. Thank you very much for joining in. I really appreciate you being with us on the show today. Okay, that's Devina Mehra's view on the market, which is actually